Amazon had a kind of big market sell-off today, so I want to go over some of the short plays that could have been made. Similar chart to Tesla, we have this wedge pattern here that fails. First of all, we have a nice sell-off. This made a new low, so we moved our previous low to high swing off of this low, and here you can see there is the 282 level where we try to bounce off it, but our upward swings are getting smaller and smaller, and eventually we get rejected by the 50-day moving average. So how could you have determined this upward trend is coming to an end? You would have drawn a Fibonacci extension off of this low to this high and then projected it off of this low. So now you can see we're making the 1618 extension of this previous upward swing. So our upward swings are getting bigger, and we're almost getting higher highs. Then you can see that doesn't last. So when you've hit a level of your extension and you start to sell off, when you come to the lowest point, you activate your Fibonacci extension, you project it off of that low, and now you can see we're making 61.8% of our previous initial upward swing, which isn't great, but we are bouncing off this 282 extension of an overall larger swing. However, we're making lower highs, and we have to wait for the next pullback and the next push up to really determine course of action here. So we activate the drawing, move it over to the next low, and now you can see we're only making 28.2% of this. So we can confirm our highs are getting lower and our upward swings are also getting smaller. Plus we're getting rejected by the 50-day moving average, and all those three factors coupled together, I would say, puts me on a little bit more of a put side of things, because our upward swings are losing momentum. And then you can see we confirm it here when we really dip below the 50-day moving average, push up to get rejected by it. So this might have been a great place to enter puts, or maybe if you waited for a rejection off the VWAP. It's another classic sign of the market turning to the downside. So I think either of these 2 points would have been ideal to enter puts or a short position. And if you look also, here our upward swings are getting smaller, while here our downward swings are getting larger. Now we can see we make 1618 of our previous downward swing. We push up to the 100 extension and get rejected, which is very common. So when you push back up like that, you project your drawing off the new high, and you can determine new profit targets or areas of support from there. So here we push down to the 100 and push up to the 618, which is smaller than our previous push down and push up. But then again, if you project this drawing off of the new high, you can see that we make the 1618 again. So our downward swings aren't even getting smaller. Tomorrow morning I might want to wait for a push up to the 100 and see if I can get another 100% short in. Usually at the end of a downward trend, your downward swings want to get smaller. So if we go down and push up to the 100, maybe we'll sell off to the 618, and I'll be more skeptical of this downward swing coming to an end when I see market sentiment dictate something to that effect. Anyways, just to review, that's how you can use upward swings getting smaller to determine the end of an upward trend, or use downward swings getting larger to determine profit targets for puts. Also being aware that the 50-day moving average and the VWAP rejecting price action is usually a very bearish sign. Okay, hope this helps.